Okay, so hello everyone. We do past papers at the end of the course, and we solve almost all the past papers of the last few years. So today we have a question in front of us from December 2024 past paper, and we will do this complete past paper. So let's start with question number one. This scenario relates to six requirements. You know, question number one is a big question of 30 marks. So this scenario relates to six requirements. Let's see. So it is 1st July 2005. You are audit supervisor at Flynn and Company. So since you're audit supervisor at Flynn and Company becomes the audit firm, right? And you are working at the audit of Granstan. Granstan is the client which sells electronic kitchen appliances from 40 stores across the country. You are reviewing documentation provided by finance director of Granstan, including extracts of company system of internal control in advance of the interim audit for the year ended 30th of September 2005. Although website, payroll, inventory systems are standalone, sales and purchase modules are fully integrated into the computerized accounting system. So sales and purchase modules are integrated into computerized accounting system. So I don't think so this paragraph is of too much help. It is 1st July. You are audit supervisor at Flinda. Flinda is the audit firm. You are working across the audit of Granstan. That's the client. It sells electronic kitchen appliances from 40 stores. You are reviewing documentation provided by finance director of Granstan, including extracts of company system of internal control in advance of interim audit for the year ending 30th September 2005. Also, website, payroll, and inventory systems are standalone. They are separate. Sales purchase system are integrated. Sales. Granstan has both business and retail customers. So you have business and retail customers. Business customers can apply for a credit account through Grandstan's credit control department. After performing necessary checks, the credit control department sets a credit limit which is authorized and then regularly reviewed by the finance director. This seems to be a very good point because usually you've seen the weaknesses that credit limits are not set by the credit control department. They are not reviewed. So here it says credit control department sets a credit limit. It is authorized and regularly reviewed by the finance director. As well as purchasing in store, business customers can purchase goods via company's website and collect them from their nearest store or have them delivered. As part of the invoicing process, a member of finance team matches the details on the online order with the goods dispatch note before sales invoice is raised based on these documents. Again, a good thing. Member of finance team matches the details of the online order. The customer has placed the online order. He matches the details with GDN, whether we are dispatching the same goods which he has ordered, and then he raises sales invoice to ensure there is no problem in invoice or you're not issuing a wrong invoice. Each store charges the same prices for goods, but customers who are on the mailing list receive weekly emails with discount offers. To claim the discount, customers must show this email at the cash register and have the discount barcode with the email scan. System then deducts the discount from the price charge. So each store charges same price, but there are weekly discount offers. To claim the discount, customers must show the email because you receive email for discount. And there is a barcode when the email scanned. The system then deducts discount from the price charge. Again, there is no manual discount being offered by anyone or sales member cannot offer discount. Email is being given for discount and the customer shows the barcode, which is scanned, and then the prices get reduced. Grandstan's monthly management accounts analyze revenue by store, product, and type of customers. Percentage movements in each of the categories are reported with comparison to the previous month and previous year. On a monthly basis, sales director reviews this information, investigates any unexpected movements, and completes a report which is presented at the next board meeting. For any variation, sales director reviews the information on a monthly basis, reports are prepared, and he completes a report which is presented at the next board meeting. I will talk to this in detail once I read the requirements. Okay. Now purchases. First was sales, now it's purchases. Granstan has a central purchasing department. A monthly exception report of any changes made to the supplier master file data is automatically generated, printed, and then filed. So an exception report. What is an exception report? Any changes made to supplier master file is automatically generated. So if anyone makes any changes to supplier master file, a report is presented. Okay. When goods are ordered, a purchase order is generated within the purchase ordering module, authorized by relevant individual and sent to supplier. The purchasing and finance department as well stores are able to access the ordering module to view orders. This thing is a very good thing again. Then when goods are ordered, a purchase order is generated within the purchase ordering module, authorized by relevant individuals, sent to supplier. Purchasing, finance, stores all can view orders. Goods are delivered directly to the relevant store where a store employee checks the quantity supplied to the supplier's delivery note and the purchase order. So goods are delivered directly to the relevant store. Store employee checks the quantity supplied to the supplier's delivery note and the purchase order. So he checks the quantity supplied to the delivery note and the purchase order. On completion of the checks, an electronic GRN is produced. Only the stores and finance department have access rights to view the complete GRN. Due to staff shortage in the finance department, supplier statement reconciliations are no longer performed. Okay. Now, after sales and purchase, there is payroll. Granstan is a separate human resource and payroll department. HR department is responsible for setting up employee records for new employees. HR department sets up new employees. As part of this process, an authorized joiner form, including all relevant details, is sent to payroll department so that new employees can be added to the payroll. However, when temporary employees are required at short notice, joiner forms are not completed. Instead, the relevant stores manager notifies the payroll department by email on the day the new employee starts work. So for all the permanent employees, there is a joiner form which is sent to the payroll department so that employees are added in the system. However, temporary employees, there is no joiner form, and stores manager notifies the payroll department by email. All employees permanent are paid on a monthly basis by bank transfer. Payroll for each store is passed to the stores manager for review and approval 2 days before the payment date. Stores manager is required to report back to the payroll department only if errors are identified. So stores manager is only required to report back if errors are identified. Temporary employees are paid in cash. Pay packets are prepared and distributed by payroll department. When employees collect their pay packets, they are only required to state their name. They then count the cash in the pay packet and sign for it. Okay, that's it. I will read them in detail as well once the requirements are there. Let's see the requirement A, ISA 315, identifying and assessing risk of material misstatement, that states that an entity system of internal control consists of 5 components: control environment, risk assessment, entities, process to monitor, system of internal control, information system, communication, and control activity. Using table below, describe 5 components of internal control. You do not need to refer to the scenario. Very easy requirement. 5 components of internal control. I have taught you: control environment, control activities, entities, risk assessment process, information systems, and monitoring of controls. Okay. There was this thing in our notebook as well. Internal control has 5 components. Control environment, control activities, risk assessment process, information systems, and monitoring of controls. Obviously, these are very long pieces of information, so it's just 5 marks, and you can write one mark for each. So let's start with control environment. I've taught you control environment is the overall environment, what directors are doing, what management is doing. Obviously, that helps to make control. So the control environment includes governance and management functions and attitudes and actions of those charged with governance and management concerning entities' internal control. Control environment sets the tone of an organization, influencing control consciousness of its people. Let's make it in a summarized form. Okay, it's the governance and attitudes, actions of those charged with governance. It sets the tone of organization. It has many elements such as communication, enforcement of integrity, ethical values, commitment to competence, participation of those charged with governance, operating style. So you can make it a bit summarized. It has many elements like communication of integrity and ethical values, operating style, organization, structure, etc. So I think this will help you gain 1 mark. That's enough. Obviously, I cannot write the full all these for 1 mark. I think it's fine. Okay. Then there is entities risk assessment process. Risk assessment process includes how management identifies business risk in accordance with applicable framework. It estimates significance, assesses likelihood of occurrence, decides actions. Okay. It includes how management identifies business risk relevant to preparation of financial statements in accordance with applicable framework. It estimates significance, assesses likelihood of occurrence, and decides actions to manage them. Okay. So I think it's enough for a mark that you have written entities risk assessment process. Monitoring of controls. So where is monitoring? It is a process to assess effectiveness of internal control. Okay. Process of assessing effectiveness of internal control over time. It involves assessing effectiveness of controls on a timely basis, taking necessary remedial actions. So I can make it short. It is done through monitoring of ongoing activities, evaluations, or combinations. I'm making these things a bit short to let them, I think, complete in a mark or so. Because I think if you write whole full these things, they are not worth 1 mark. Okay. So these are 5 marks, 1 mark per each. So I am only making it relevant till 1 mark, and that will give you an advantage, right? Because many people ask me that how can we write so long things, whether we have to learn so long things. Okay, learning is necessary. Okay, you need to learn these because this is 5 straight marks. But rather than learning from here, you can learn these short statements because this maximum comes in 1 mark each. Okay, information system and communication. Information system includes accounting system consists of procedures and records. Consists of procedures and records designed and established to initiate, record, process, and report entities, transactions, and to maintain accountability for related assets, liabilities, and equity. Okay. And finally, there is one last thing, that is control activities. It's a very good question, and you are what we say lucky enough, because rather than learning all those long things to notes, this has to come in one mark. So I've made it short for one mark. You can learn this and write that in the exam. Okay, control activities. These are the policies and procedures which help ensure directives are carried out. They are applied at various organizational and functional levels. Okay, so you can write this quickly, and for future questions, you can just remember and memorize this. This will help you gain marks. Okay. Okay, let's move forward now to the next part. 6 marks in respect of the sales system. So remember, this is only related to sales system. No need to look at any other system. This is only related to sales system. So in respect of sales system of Granstan, identify, explain 3 direct controls. It is not asking weakness, it is asking for strengths, controls, which the auditor may seek to place finance on. Describe a test of control. Okay, 3 controls and test of controls. Okay, I think that's a very clear requirement that direct controls means you need to state the controls and test of controls, whereas weaknesses means you need to write the weakness. But now it's controls. Okay, sales system. Business customers can apply for a credit account through Granstan's credit control department. After performing necessary checks, credit control department sets a credit limit which is authorized and reviewed by the finance director. Okay. Credit limit is authorized and reviewed by the finance director. Very good point. Previously we have seen many weakness questions where credit limit is set by a clerk. So this has an impact that when credit limits are set by junior clerks, they may give credit to high risk customers, resulting in increased chances of bad debts. So you mention a control that credit limit should be set by a senior official finance director. So here it's a very good point that credit limit is authorized and reviewed by the finance director. So you just don't have to write the weakness. The impact should also be there. So similarly, you just don't have to write the control. The impact must be there. So had the credit limit been set by a junior, what would have been an impact? He might give credit to high-risk customers, resulting in increased chances of bad debts. So when credit limit is authorized by the finance director, impact, this will ensure credit is only given to credit worthy consumers leading to reduced chances of bad debts. And remember, this control credit limit should be set by finance director. How to test this control, that the company is saying that there is a control credit limit is authorized and reviewed by the finance director. Remember, ask for a sample of credit limit authorization forms and ensure it is reviewed and authorized by finance director. Obviously, if there is a control that credit limit is authorized and signed by the finance director, so you need to take a sample of credit limit authorization forms, see whether they are reviewed and authorized by finance director. If they are, that means control is working. Okay. So I think it's a good 2 mark for you. Then, as part of the invoicing process, member of finance team matches details on online order with the GDN before sales invoice is raised based on these documents. Okay. A member of finance team matches details on online order with GDN before invoice is raised. Now, let me recall you. This has come many times in the question as a weakness. that invoice is raised and sent to the customer without checking GDN. Okay, so when invoice is sent to customer without checking GDN, what is the goods dispatch note? The goods you have dispatched. So you are sending invoice to customer without checking the goods dispatch note, that whether you send this stuff to the customer or not. So there are chances that customers gets a wrong invoice and he gets dissatisfied. Okay. So always you should give a recommendation, and we have given this recommendation that before giving invoice, you must check with GDN that whether we are sending the same invoice as the goods dispatch. You should also check the invoice with the order, that are we charging for the same items which are ordered. So there has been a weakness many times in the previous questions. This has happened that you send the invoice to the customer without checking against what his order was, purchase order, and GDN, what was dispatched to him. You must all know that invoice must always be given for those items which have been dispatched and ordered. Here it's a good control that finance team is matching the online order with GDN, that whether order what he sent were the same as dispatched, and then invoicing is raised to ensure we are only charging for goods he ordered and dispatched. So if finance team is matching details on online order with GDN before invoice is raised, impact, this will ensure correct invoices are sent to customers. This helps ensure that you are sending correct invoices. Okay, so if the weakness comes like this, that we are just sending invoice. Okay, so you can write this that we are sending invoice without checking against order and GDN. So there are chances of wrong invoice sent. Okay, but if you are checking the invoice before raising the invoice, you are checking the online order and GDN. This ensures correct invoices are sent to customers for goods they ordered. Okay. So how to test this control? They are saying that as part of the invoicing process, a member of finance team is matching before invoicing. Okay, so as part of the invoicing process. So you can write, observe the invoicing process and ensure that member of finance team matches online order and GDN before raising invoice. Okay, so I think we have done two things, and seems to be like this, that from the three controls, not weaknesses, controls, we have written two. Credit limit was being authorized, that was a control. So to test this control, ask for a sample of credit limit authorization forms. Impact is very necessary, like weakness impact needs to be written. Similarly, the control impact also needs to be written. And finally, there needs to be one more control. Each store charges same price for goods. Customers who are on the mailing list receive weekly emails with discounts. To claim discount, customers must show this email at the cash tills, have discount barcode within the email scan system, then deduct the discount. That means discount is not offered manually. It is offered via email. Remember, there is a weakness that discounts were being given by sales staff manually. So you wrote the impact that sales staff may give unnecessary discount to increase revenue, or they may give discounts to their friends and relatives, leading to loss for the company. Now there is no manual discount. You are sending emails with discount offers, and customers show this email and have the barcode scan. There is no manual discount offer. So what would be the impact? This ensures that only authorized customers who receive emails are given discounts, and there are no unnecessary discounts offered. Okay. So when discount system is working like this, that you are only offering them via email, no manual discount offer. This ensures that who get email, they get discount. No unnecessary discounts are offered. So company is saying we have a control. We send emails, okay, and only discount is offered via email, no manual discount. Okay, so to test this control, you can observe the process at the cash register, whether the scanning is being done, okay, or you can say attempt to enter discount manually without email barcode. System should reject discount. Okay, so I think three direct controls were very easy here, and we have completed them as well. That when it says that three controls, always remember when it asks for weakness, I have to write impact. When it asks for controls, I have to write impact. Okay, so control was credit limit was authorized by finance director. Had it been a weakness that someone else was doing, I would have written that this will ensure that credit is granted to unnecessary customer, leading to increased chances of bad debts. Now it's a control that credit limit is set by finance director. This ensures credit is only given to credit-worthy customers. If no one is matching GDN and invoice, wrong invoices can be sent. If a member is matching online order, GDN, and then raising invoice to ensure only dispatch goods are invoiced, this will ensure correct invoices are ordered. And to test this control, you can observe whether they're matching. And discount has only email automatic barcode, no manual. So no unnecessary discounts. And to test this, you can try to attempt manual discount, system should reject. Okay, please copy this so that our next requirement goes on. Okay, so I think up till now, 11 marks are done. So let's move forward. Very big 10 marks requirement, and students find these requirements very easy. Identify explain five deficiencies in purchase and payroll system. Like previous requirement was only restricted to sales system. Now you're open with purchases and payroll system, five deficiencies, and provide a control recommendation. So five deficiencies and control. And I very much like this requirement. So let's start searching for five deficiencies. Exception report of changes is automatically generated when goods are ordered. Purchase order is generated with the purchase ordering module authorized by relevant individual. This is not a weakness that a purchase order is generated and it is authorized by the relevant individual sent to the supplier. Very good thing that purchase order is being generated, authorizing by the relevant individual, sending by the supplier. Purchasing and finance departments as well as stores are able to access the modules. Goods are delivered directly to the relevant store, where a store's employee checks the quantity supplied to the supplier's delivery note and purchase order. That's a very good thing. That goods are delivered to the store, an employee checks the quantity to the supplier's delivery note. Had it been stopped here, this would have been a weakness. That store's employee is checking the quantity with the supplier's delivery note. So supplier's delivery note is sent by the supplier. It will mention the same quantity with supplier sent, not what you ordered. So let's see what he's doing. He is checking the quantity against supplier's delivery note and the purchase order. That's a very good thing. That when goods are being delivered, employee checks the quantity not against supplier delivery note, because supplier delivery note what will state what supplier has sent, not what you ordered. So it's comparing the quantity with supplier's delivery note and the purchase order to ensure the quantity is same as what we ordered. But I'm obviously it's an art to find weakness. I can pick one weakness here. Then when goods are delivered, employee checks the quantity against supplier delivery note and purchase order. Had it asked for control, I would have written that's a good control. There's a weakness as well. He's checking the quantity, supply, delivery note, and purchase order. He's not checking the quality. So this can be a deficiency. Remember, it's a good deficiency. And some people might not have picked that because they were considering it's a good thing that he's checking the quantity against delivery note and purchase order. I am saying, had it asked for strength, I would have written this. But actually, weakness picking is an art. He's checking quantity, not checking quality. I can write it as weakness. Impact. What will happen? This may result in defected goods being supplied and later on defected product being manufactured and delivered to customer, leading to loss of goodwill or customer dissatisfaction. Okay. Recommendation. On arrival of goods in store, the employee must be instructed to check quantity as well as quality to ensure only non-defected goods are received and any non-defected goods are immediately returned. So see, I got this from purchase. On completion of checks, electronic GRN is produced. Only stores and finance department have access rights to view the completed GRNs. Okay, so electronic GRN is produced. Only stores and finance department have access rights to view the completed GRNs. Due to staff shortages in finance department, supplier statement reconciliations are no longer performed. So this is the weakness has been studied many times. Supplier statement reconciliations are no longer performed. Impact. Remember, any discrepancies between supplier records and companies' records won't be highlighted, identified, and resolved on a timely basis, leading to disagreements later on. Okay, I think I have taught this point multiple times in the classes and past papers that if any reconciliation is not performed, any errors, disputes, disagreements, they are never identified on a timely basis. Okay, and this can result in disputes later on, or you can write, or it can result in wrong payments made. Okay, so anything can happen. And recommendation, supplier statement reconciliations should be performed on a regular basis, preferably every month. Okay, and should be reviewed by a responsible official, right? Because I have got two weaknesses and I like the weaknesses. Students like the weaknesses part. People who fail FET as well, when I check their feedback, this topic always has good marks. Okay, that supplier statement reconciliations are no longer performed. Any errors, disagreements are not identified and resolved on a timely basis that can result in wrong payments or disputes later on. Supplier statement reconciliation, any reconciliation should be performed on a regular basis, preferably everyone. A responsible official should review that. Okay. So I don't think so there are any more weaknesses which I'm able to find at the moment in purchase, but don't worry, it's asked for purchase and payroll. So there might be weaknesses in payroll. So first I would like you to copy this so that I can move towards the payroll ones. Or let's see, I can manage some space here to write some more things. Okay, copy. Then we will move towards the next payroll, try to find some weaknesses from there. Okay, now I need to find three more deficiencies because this question is of five deficiencies. Now let's see what other stuff I have. Granstan has a separate HR and payroll department. HR department responsible for setting up employee records for employees. As part of this process, authorized joiner form, including all relevant details, is sent to the payroll department so that new employees can be added to the payroll. However, when temporary employees are required at short notice, joiner forms are not completed. Instead, relevant store manager notifies the payroll department by email on the day the new employee starts work. So for the process is that an authorized joiner form, including all details, is sent to the payroll department so that new employee can be added to the payroll. Whenever new employee join, a joiner form is being asked to send, and that has to be sent to the payroll department so that they can be added. But temporary employees are not required for joiner form. Relevant store manager notifies the payroll department by email on the day the new employee starts. All permanent employees are paid by bank transfer. Payroll for each store is passed to the stores manager for review and approval 2 days before payment date. Stores manager is required to report back to payroll department only if any errors are identified. Permanent employees are paid by bank transfer. Payroll for each store is passed to the stores manager for approval 2 days before payment date. So for payroll for each store, it's passed to the stores manager for review and approval 2 days before payment date. Stores manager is required to report back to payroll department only if errors are identified. That means head office sends email to the stores manager for approval of payroll. He is required to only report if there are errors. This is a weakness because if no response is received from them, that means we believe that there were no errors. That's why he didn't reply. And there might be errors. He might have not seen the email. This might result in wrong payments being made. Temporary employees are paid in cash. Pay packets are prepared and distributed by payroll department. When employees collect their pay packets, they're only required to state their name. They then count the cash in the pay packet and sign for it. So this seems to be some issues there. When employees collect their pay packets, they are only required to state their name. I am going to collect the pay packet and I'm only required to state my name. This may result in any employee using some other employee's name and taking his salary, leading to loss for the company, and company may have to pay original employee. Again, you see, it's a very big weakness that to collect your cash of pay packet, I just need to state my name. Any unknown person can go and said, okay, this is my name, Ahmed Shafi, give my pay packet. I just check the name and give the pay packet. So anyone can collect my salary. This is loss for the company because company has to pay me again. So what is the recommendation? While collecting pay packets, employees must be required to show a photo ID to ensure correct employees are handed the pay packet. You see, it's a very big weakness that to collect the pay packet, you are not asking for any ID. You're asking only for name. Anyone can go and say, okay, this is my name, give me my pay packet, and wrong person can be handed over the pay. So always a photo ID should be required that Show your photo ID to ensure correct employees are handed over. Okay, their salaries. Okay, fourth one. The payroll for each store is passed to stores manager for approval 2 days before payment, and store manager is only required to report back if there are any errors. So what is happening? The payroll for each store is given to stores manager. Okay, please see this, approve this, so we will pay. And it is sent 2 days before approval, before payment, for stores manager to approve. Like I am the stores manager. HR is sending me, payroll is sending me an email that, okay, this is the payroll for your store. Please approve it, whether it's correct or not. And I'm only asked to required to report if there are any errors. What would happen? The store manager may not see the payroll, may forget to review it, and hence so he will not reply, and payroll department may perceive that since there is no reply, that means there are no errors. So they will process payroll, and this may result in incorrect salaries being paid. So payroll is sent to the payroll department for approval. Okay, only report if there are errors. He might miss the email. He might forget to reply. And since no reply, they might perceive that he didn't reply, so there are no errors. They may process the payroll, and this may result in incorrect salaries being paid. So what is the solution? The payroll department must ask the stores department, stores manager, to report back whether there are errors or not, to ensure correct salaries are paid. I shall ask the payroll department that not to reply only if there are errors. Reply in both cases, either there are errors or not. So in that case, he has to reply in both cases, and payroll knows that he has to reply in both cases. So until then, they don't receive his email, they won't process the payroll. Because previously he was only asked to reply when there are errors. So if there is no reply, I thought, okay, there are no errors, that's why I didn't reply. I processed the payroll, wrong salaries. But now I have instructed them, reply in both cases, whether you agree with the balance or disagree, whether there are errors or not. So now I know that he will respond in both cases. So until his response is received, I won't process the payroll. Okay. One last is required. You can catch it from here. Granstan has separate HR and payroll department. HR department is responsible for setting up employee records for new employees. As part of this process, authorized joiner form, including all details, is sent to the payroll department so that new employees can be added to the payroll. So what is happening? The HR department uh, has an authorized joiner form for new joiners, which is sent to payroll department so that new employees can be set up into the system. But when temporary employees are required, joiner forms are not completed. Relevant store managers notify the payroll department by email on the day the new employee starts work. So, for temporary employees, joiner forms are not completed, and store manager emails the payroll department when new employee starts work to add him in payroll. For the permanent employees, a joiner form is prepared by the HR department, and this joiner form is sent to the payroll department so that new employees can be added in the payroll. And when they are added in the payroll, then only they will be paid. When new employees are added in the payroll, then only they can be paid. So HR fills the joiner form and sends it to payroll department so that new employees are added into the payroll and then they're paid. But for temporary employees, you don't fill a joiner form. Only the stores manager emails the payroll department, okay, that this has employee has joined, Mr. Ray has joined, please add him in payroll. What can happen? The store manager may forget to send email to payroll. Hence, new employee won't be added in payroll and won't be paid, leading to employee dissatisfaction or loss of employee goodwill. If you are not filling their joiner forms, you are just asking the stores department to send an email to them. So what can happen? The stores manager may forget to send email to payroll department, and when they won't send it, they won't be added in the payroll and they won't be paid. So this can result in employee dissatisfaction or maybe loss of employee goodwill. So what can be the solution to this? Joiner form shall be made mandatory for temporary employees as well, to ensure they are also added in payroll. Okay, joiner form should be for all. Okay, joiner form should be for all. It should not only be like this, that okay, this is for only the, what do you say, permanent employees. This is not for temporary employees. That should not be the case. Joiner form should be made mandatory for whole category. Okay. So I think we have completed the 5 weaknesses. So I want you to note this down. We are short of some space, so I would first give you time to copy 3, 4, and then you can copy the fifth one. I will change the slide a bit upside so that you can do it easily. Okay, please copy 3, 4, then I will show the 5, 1 on the screen. Okay, we have completed approximately 21 marks requirement. So in just a minute or two, when the copying time is over, I will move towards the next two parts. Okay, so till now, I think three requirements are done. And it was the first requirement, 5 elements of internet control, 5 marks, then 6 marks, 3 controls, and their test of controls, and then 10 marks weakness recommendation. Okay, I think we should move towards the concluding part of these questions. What's next in store? Describe substantive procedures auditor should perform to obtain sufficient appropriate audit evidence in relation to revenue. So this requirement relates to substantive procedures, okay? And it's talking about substantive procedures for revenue. So I have to answer this requirement where I will deal with the substantive procedures for revenue, okay? What about substantive procedures for revenue? Let's go in my notes file where we have taught you substantive procedures for revenue, okay? 5 substantive procedures need to be written. This is my notes file, and you can see there are 7 substantive procedures, and you can write these procedures for revenue. First, compare overall revenue against prior years and budgets, investigate difference. You need to just link it to the scenario by mentioning company name or any date or customer. Let's write it. So compare overall revenue of Granstan against prior years and budgets. Investigate difference. Okay, a very easy 1 mark. You can refer to the answer key, exact same point is written. Calculate gross profit margin compared to previous years, investigate difference. You can write this as well. Then again, investigate difference. If I want to write, that's nothing harm. Even I just read the answer. Point number 3 is written exactly in the official answer as well. The official answer is in front of me, and it reads the point number 3 as it is in the official answer, which states that compare gross profit margin to prior year, discuss any fluctuations with management. So discuss any fluctuations with management or investigate differences, the same thing. So point number 3 is written, and if you want to write it, it's your choice. If you want to ignore it, your choice. Okay. So maybe if you want to write point number 2, point number 3, I have no problem in that. The examiner has no problem in that. Even I just read the answer, I saw point number 2 as well. Calculate gross profit margin, compare with prior years, investigate differences. So we can write one more point. Compare gross profit margin of Granstan against prior years. Investigate any differences. I will leave the third point of investigate difference. Let's move forward. Sales tax. I don't think any sales tax information was given, so leave it. Select a sample of credit notes, trace through original invoice to ensure invoice correctly removed from sales. Okay, any sales returns need to be accounted for. This is a very common procedure of revenue. Select sample of credit notes, trace through original invoice to ensure invoice correctly removed from sales. Fourth one. Select a sample of customer orders, agree to dispatch notes and invoices through to inclusion ledger to include completeness of revenue. Very good point for completeness of revenue. Agree to dispatch notes and invoices. Through to inclusion. Sales ledger to ensure completeness of revenue. And this is a cutoff point. Select a sample of both pre and post year end invoices compared to invoices to ensure recorded and correct accounting period. The typing mistake, select a sample of GDNs pre and post year end compared to invoices to ensure recorded and correct accounting period. So, okay. So select sample of GDNs, both pre and post year end. Compare with invoices to ensure audit incorrect accounting period. Again, there is a very big debate. We need to relate to the scenario and stuff like that. I won't answer anything. I would just say you go and read the examiner answers as it is points are written. If this note key of substantive is followed properly, it gives you very good marks. Okay. And that's why in every attempt there are positions coming, right? So please note this 5 marks requirement. Then I will move towards the last part. So now 26 marks are done. Let's see what the last 4 mark requirement is. Okay. The last requirement is Granstan is intending a stock market listing in the next year and therefore wants to take steps to ensure company will be compliant with corporate governance principles when it lists. There are suggestions that at the CEO, Ned Zappa is due to retire shortly. He should become chair of the board and alternative CEO be appointed. So it wants to be compliant with corporate governance principles. There are suggestions that the CEO, Ned Zappa, is due to retire. CEO is due to retire. CEO is an executive, is due to retire. He should become chair of the board. So once he retires, CEO, the executive, he should become chair of the board. That's the suggestion. The company is actively recruiting independent NEDs whose remuneration will include a bonus based on company's profit. To ensure remuneration is sufficient to attract and retain both NEDs and EDs, the CEO will perform a market comparison analysis and decide the remuneration of all directors. So CEO will decide the remuneration of all directors. That's it. So only information is that the company wants to be compliant with corporate governance. Suggestions are that CEO Ned Sepa is due to retire. He should become chair. Chair means chairman, and remuneration uh, will be decided by CEO of all directors. Okay. Describe two corporate governance deficiencies faced by Granstan. Provide a recommendation. So two deficiencies and recommendations. I have easily found two deficiencies. The first one, remuneration of all directors is decided by CEO. Is it a corporate governance weakness? Yes, that the CEO is deciding the remuneration of all directors. Why it is a weakness? This may result in CEO setting high remuneration for himself and people who are close to him, resulting in unfairness or loss for the company. Remember, you have studied this, that remuneration of directors is decided by any person, ED. So remuneration is decided by CEO. Who is CEO? Executive. So remuneration of all directors is decided by executive. So what will happen? The executive director CEO will set high remuneration for himself, and those who are close to him give favors, benefits, resulting in loss and unfairness. Okay. Recommendation. A very easy thing has been studied. A remuneration committee shall be set up to decide remuneration of directors with EDs being paid as per their performance and NEDs being paid as per their skill and time. Okay. So remuneration is decided by CEO. That's a corporate governance weakness because he may set high salaries for himself, his close friends. And recommendation, a remuneration committee shall be set up, which decides remuneration. ED shall be paid as per performance, and ED as per their skill and time. You have studied this. Okay. One more weakness, that there is a suggestion that CEO, who is an executive, Ned Sepa, is due to retire shortly. He should become chairman. You know, chairman must be an independent NED. The previous executive should not act into the role of the chairman because previously he worked as ED. He should not become a chairman, NED. NED should be completely independent. This is the weakness which has been studied. So it is suggested that as CEO, Ned Sepa is due to retire. He should become chairman. Now, why is a weakness? Since he was an ED, as chairman, he may not bring required level of independence. And any issues during his role as ED may not be brought to the attention. It can be anything, any fraud committed by him. He won't You see, if he has worked as CEO, executive director, okay, it can be anything because corporate governance says that an independent entity should be appointed as chairman. Chairman should not be previously ED. So it can be anything that any issues during his tenure as ED, any fraud committed by him, he may not bring to the attention as chairman. That's why you need independent entities, independent people, that any fraud committed by previous people, they're brought to the attention. If a previous executive director who is the CEO now becomes chairman, so any issues during his tenure would not be highlighted by him. So what is the recommendation? An independent entity who is not involved previously in executive role shall be appointed as chairman, and net SEPA should not become chairman. Or you can write Nat Sepa should not become chairman of the board, and an independent NED who is not previously involved in executive role shall be appointed. So neither CEO chairman should be same. This has also been taught. Neither previously executive should become chairman because chairman must be an independent NED. So I think this is worth 4 marks. Remuneration is set by CEO. He may set high remuneration for himself and friends. Recommendation remuneration committee, and CEO should become chairman. Not allowed because he's an ED. Any frauds, errors by him won't be highlighted. So an independent entity should be appointed. Okay. This ends this 30-mark question. And our question number one, if you have any queries, you can ask. Else you can copy. I'm giving you some time, and then we will move towards question number two. Okay. Okay, hello everyone. So now in today's session, we are going to attempt question number 2 of this September-December 2024 syllabus past paper. We already did question number 1 of this September-December 24 past paper. Now it's question number 2. Let's start. This scenario relates to 2 requirements. Okay, it is 1st July. Your firm, Young and Company, has recently been appointed as auditor to Musitastic Company, and you're planning the audit for your new client for the year ending 31st August 2005. Audit manager has attended a planning meeting with the finance director, has provided you with the following notes of the meeting. Okay. Now it is 1st July. You're from Young and Company. What is your firm? Young and Company. So Young and Company is the audit firm. Has recently been appointed as auditor to Musitastic Company. So you have been recently appointed to as auditor to Musitastic Company. That means Musitastic Company is the client. You are planning the audit for your new client for the year ending 31st August 2005. Audit manager has attended a planning meeting with the finance director and has provided you the following notes of the meeting. Meeting notes. Musitastic Company operates a chain of 50 music stores across the country, selling musical instruments and offering weekly lessons. When booking lessons, customers are required to pay for 10 lessons in advance. So Musitastic Company operates a chain of 50 music stores across the country, selling musical instruments and offering weekly lessons. So it is selling musical instruments. The company sells musical instruments and also offers lessons. That means they offer lessons, classes as well, learning classes, as well as sell the instruments. When booking lessons, customers are required to pay for 10 lessons in advance. Customers need to pay for 10 lessons in advance. Musicistic company sells a wide range of instruments. Because of the number of stores and the high number of different inventory lines, the inventory counts will not be able to complete it in one day. As a result, inventory count is to be spread over 29, 30, and 31st August. So what was the year end? Year end was 31st August, right? So Musicistic is offering a wide range of instruments. Because of the number of stores and high number of inventory lines, inventory counts will not be able to complete it in one day. You are not able to complete inventory count in one day. As a result, inventory count will be spread on 29th, 30th, 31st August. 3 days the inventory count will be done. Adjustments will be made for goods received and dispatched between the date inventory is counted and the year end. Yang is able to attend sufficient inventory counts for the purpose of faucet. Okay. Now the thing is that your year end is 31st August. So whatever inventory is there, it can be counted on 31st August, but company has such a large volume, inventory count is not possible in one day on 31st August. So inventory count is being done on 29th, 30th, 31st August. So if you're doing inventory count on 29th, 30th, 31st August, what will happen to the inventory coming and selling? So they're saying that adjustments will be made for goods received and dispatched between dated inventories counted and year end. So you will adjust the inventory according to that. Yang is able to attend sufficient inventory count. So audit firm will be able to attend the inventory count. Okay. The company has been expanding steadily and during the year has spent $2.4 million on refurbishing. All of this expenditure has been recognized as property, plant, equipment. Company is also planning to add a rehearsal space to the 20 largest stores, and in order to finance this, in April 2005, company obtained a 8 million interest-bearing loan, which is repayable in quarterly installments in arrears over 5 years. Okay. So there are two very easy points here, that 2.4 million on refurbishment, which has been recognized as property, plant, equipment, and company obtained a bank loan, which is repayable in quarterly installments in arrears. Okay. And then the next issue is to raise awareness of the company's existing products and the new rehearsal spaces. Musitastic Company launched a radio advertisement campaign in May. The directors have indicated that the year-end advertisement cost of 0.8 million relating to this campaign will be recognized as a current asset because they believe these advertisements will help boost revenue for at least the next 12 months. Final advertisement will be aired on the radio before year-end. So to raise awareness, company launched a radio advertising campaign. An advertisement cost of 0.8 million will be recognized as a current asset. Okay. Musitastic Company has an internal audit department which undertakes controls testing across the stores. Each store is visited at least once a year. The audit manager has discussed with the finance director that the external audit team may rely on controls testing which is undertaken by internal audit. Internal audit investigations during the year have highlighted increasing number of differences in several stores when reconciling cash register records to actual cash in the cash sales. Directors have decided not to investigate these differences on the basis that they have involved only small amounts. So Musitastic has an internal audit department. Audit manager has discussed with the finance director that external audit team may rely on controls testing, which is undertaken by internal audit. So external audit team is relying on the controls of internal audit. Internal audit investigations during the year have highlighted increasing number of differences in several stores when reconciling cash register records to actual cash. And directors have decided not to investigate because they have small amounts. Musitastic's financial accountant retired suddenly in November 2004 due to ill health. As a result, finance department was understaffed until a replacement was recruited in March. So in November, financial accountant left and finance department was understaffed and replacement was recruited in March. So November, December, January, February, March, 5 months it was understaffed. Financial accountant retired. In June 2005, Musitastic received notification that the Music Licensing Authority is investigating complaints that many of the music teachers had breached copyright regulations by photocopying printed music for use in their lessons. Directors have informed you they do not intend to provide or for disclose any potential fines as they believe they have the required permission and that Musitastic company has no legal liability. Okay, so this is it. Uh, Requirement A. ISO 300 Planning and Audit of Financial Statements provides guidance to assist auditors in planning audit of financial statements and explains the benefits of doing so. Part A, explain the benefits of audit planning, 4 marks. You do not need to refer to the scenario to answer this requirement. So explain the benefits of audit planning. Okay. We have discussed this in the chapter of audit planning that audit planning helps auditor to uh, devote attention to important areas of audit, right? Because if you do planning, you can get devoted to important areas. It also helps in identifying risky areas. It also helps in identifying a proper timetable. Okay, so it's just, I think, 4 easy marks. And if you go in my notes, the notes of audit planning, you see, here is mentioned advantages, importance of planning. Okay, so I have given you the advantages of audit planning, and what you need to do is that you just need to write 4 and gain marks. Okay. Audit planning helps auditor to devote attention to important areas. Helps auditor to identify and resolve problems on a timely basis. Helps properly organize audit so that performed in effective manner. That's it for benefits of audit planning. You can copy this. So I will move towards the next part. Okay. Okay. So I think this was a very easy for marks, and we don't have any problem in getting the marks. So let's move towards the next part. Okay. Very familiar requirement which comes in almost every attempt. Describe 8 audit risks and auditor's response to each risk. Now, as you have been taking my past paper classes, my regular classes, okay, don't rush towards 8 audit risks, okay? There might be some very easy audit risks. There might be something which you have to search. So let's just start with the easy ones which you know that they're in the question, okay? It is 1st July. Your firm, Yang Company, audit firm, has been appointed as auditor to Musitastic company. So from here I can catch has recently been appointed. So maybe it's a new client. You are planning the audit for your new client. Now it's confirmed. This is the new client. Okay. Or you can write, this is the first year of audit. Remember, this is a very common risk which we have studied multiple times that recently been appointed. Audit rights is the first year. You are planning the audit for your new client. New client means it is the first year of audit. So Musitastic company is a new audit client, the first year of audit. There is a risk. Remember this, that audit team may not be able to identify and detect errors properly due to lack of understanding of entity, leading to increased detection risk. Okay. Remember, writing inherent control detection risk is mandatory, or if you don't write, then overstated, understated is mandatory. Okay, remember this. Okay. So this is the new audit client, first year of audit. You can write this as well. And what is the risk that audit team may not be able to detect errors properly due to lack of understanding of entity, leading to increased detection risk? Remember the response. Obtain detailed understanding of entity through discussion with management, discussion with employees. Also ensure, what do you need to ensure? That more experienced staff is assigned on this audit. Okay. Also, you can write they must remain alert, skepticism. Okay. So I think this is a point which is easy 2 marks for you because there are hundreds of times you have seen this in the lecture as well, hundreds of times you have seen in the past paper classes as well, that this point usually comes. So this is a new audit client, first year of audit. What is the risk that audit team may not be able to identify and detect errors properly due to lack of understanding of entity? This is increased detection risk, and obtain detailed understanding through discussion with management, employees. Also ensure more experienced staff is assigned. Okay, let's move forward. I will first go with the easy ones. The company has spent $2.4 million on refurbishment and recognized it as property, plant, equipment. Remember when you spent on refurbishment, okay, and companies recognize it as PP, property, plant, equipment. What is the risk? Remember this? That when it's just written that you have spent on refurbishment. So you write there is a risk that it's incorrectly classified between capital and revenue. Hence, capital may be misstated, over understated, or revenue may be over understated. Okay. But now it's written that the company has spent 2.4 million and this expenditure has been recognized as property, plant, equipment. You have treated it as capital. So there is a risk that this is incorrectly treated. It might have been some portion as revenue as well. Okay. So there is always a risk that this is incorrectly classified. And when there is a risk that is incorrectly classified, you have treated it as capital. So capital may be overstated. Had it been written, the company has recognized all this expenditure as expense. So you would have written that there is a risk that it's incorrectly classified as expense and expense may be overstated. But since they have incorrectly classified it as capital, so PP may be overstated. What's the response? Obtain breakdown of costs to assess nature of expenditure. If capital, ensure it is capitalized, and if revenue, ensure it is expensed to income statement. Right? This was also a very easy point. You have studied it before multiple times in the classes. Third one, the company obtained an 8 million loan. Remember, what's the risk? There is a risk that this loan is incorrectly treated between current and non-current liabilities. Hence, liabilities may be misstated. Okay. Now, I have taught you multiple times in the class that misstated should be avoided and you should try to write overstated, understated, right? Exactly whether it is overstated or understated. And here I am using misstated myself. So I think this issue has been discussed multiple times. That it's not like that misstated is not allowed. Okay. You should prioritize overstated or understated. Okay. Because misstated means playing at both ends. Only misstated is allowed when you're unsure whether it's over or understated. Okay. Not unsure in your mind because the question is allowing you and giving you vague information. Only then you can write misstated. Otherwise, this should have been over or understated. Like the company is obtained an 8 million loan. There is a loan that this loan is incorrectly treated between current and non-current liabilities. So hence liabilities can be over understated or misstated. Okay. Over slash understated or misstated is the same thing. But you should only write either it's overstated or understated. Okay. If the question allows you, like in the above risk, 2.4 million was spent on refurbishment. Had it been like this, so I would have written that there is a risk that this expenditure is incorrectly classified between capital revenue, hence capital revenue may be misstated or over understated. But since it's told me that this expenditure has been included as PP, that means there is a risk that it's incorrectly classified and you have included as PP. So PP will be likely to be overstated. Similarly, had it told me the company obtained an 8 million loan and included it as current liability, So I would have written there is a risk that's incorrectly classified. And since you have included as current liability, so current liability will be overstated. Or I did say that company obtained an 8 million loan and included it as non-current liability. So there is a risk that this loan is incorrectly classified. And since you have included as non-current liability will be overstated. But it's nothing like that written. It's just state that company obtained a loan. Where did it include? It's not written. So there is a risk that this loan is incorrectly classified. And hence, if they have classified as current liability, it can be overstated. If they have classified as non-current liability, it could have been overstated. Now, since both actions are open, so I can write misstated or I can write over slash understated, but this should not be prioritized. Prioritized should only be over or understated, either overstated or understated. Both options or misstated can only be written when you are unclear, like here. Okay. Remember the response. The audit team should ensure that $8 million loan was actually received. In addition, the split between current and non-current liability should be reviewed, and it must be ensured that all disclosures loan are in accordance with relevant standards. Okay, so I think we have written 3 risks. I'm giving you time to copy, then we will move forward. Okay, please copy this. Okay, I think now we should move forward with the next risks. Now, see, this is a very easy thing mentioned here that to raise awareness of companies' existing products, Musitastic launched a radio advertisement campaign in May 2005. Directors have indicated that at the year-end, advertisement cost of 0.8 million will be recognized as a current asset. We know advertisement cost is an expense. They are recognizing them as a current asset. That's not like that. So obviously they're doing a wrong treatment. So current assets will be overstated, right? The directors have indicated that added run cost of $0.8 million will be recognized as a current asset. Since advertising cost is an expense, if they treat it as a current asset, there is a risk that current asset will be overstated. Or you can write, since they have not treated it as expense, the expenses will be understated. Okay. So I think this is a very easy point that 0.8 million advertisement costs they're recognizing as expense, as asset. So since it is an expense, if they treat it as current asset, there is a risk that current assets will be overstated. Response. Discuss with directors to include advertising cost as expense rather than a current asset. Okay, it's the response that you should discuss with directors that this is wrong. Advertisement cost should be treated as expense rather than current asset. In the official answer, it was written like this, that discuss with directors to remove advertisement cost as current asset and include it as expense in the statement of profit and loss. Okay, just to extend it, I think it's fine as well. That discuss with directors to include advertisement cost as expense rather than current asset. Or you can write as well that remove the advertisement cost as current asset and include it as expense. Now, investigations have highlighted increasing number of differences in several stores when reconciling cash register records to actual cash. Now, records of cash and the actual cash has differences, okay, which could indicate fraud. And management is not investigating them as they're small amounts, okay. There is a difference between cash records and actual cash balance. And directors have decided not to investigate. Okay. There is a difference between cash records and actual cash. Okay. There is a risk of fraud, Hence, cash balances will be misstated, right? Because if there is a difference in records and the actual cash, that means cash balance is misstated. If actual cash is 1,000 and records are saying 1,200, you are writing 1,200, whereas the actual cash is 1,000. This will misstate cash. Like the cash records say that the cash is 1,200, the records say, and in the till it's 1,000. Okay. So if the actual cash is 1,000, you should record it as 1,000, but you are recording 1,200. So cash balance is misstated. And whenever there is a risk of fraud, the audit team shall remain alert throughout the audit to assess risk of fraud and increase their testing on cash balances. So, whenever there is a risk of fraud, we always write this that they should remain alert throughout the audit uh, to assess this risk of fraud and increase their testing on whatever thing is there. This one in June 2005, Musitastic received notification from authority that it is investigating complaints regarding breach of copyrights. So this is a provision point. Remember this? When employees are made redundant or you receive notification from any authority, there is a risk that provision is not set in accordance with IAS 37. Hence, provisions may be understated. You have not set provision, so hence provision may be understated. Review adequacy of disclosures to ensure in accordance with IAS 37. You can also write discuss with management and ensure provision is set in accordance with IAS 37. In addition, recalculate provision. Okay, you can write any point, review adequacy of disclosures to ensure it is in accordance with IAS 37, discuss with management and ensure that they set a provision in accordance with IAS 37. In addition, recalculate provision. Okay, so I think up till now, these 6 points, I don't find any difficulty. That the first year of audit, then a bank loan point, then a refurbishment expenditure point, then advertisement costs being treated as assets instead of expense, so assets overstated. Okay, cash records and actual cash is varying, which could be a fraud, so should remain alert. Okay, and notification from any authority, provision case. Okay, so 6 points have been done out of 8. You can copy these 4, 5, 6 so that I can finally move towards the seventh, eighth, and end this question. Okay, now, as always, the case in the question is that we have found six risks and the question is asking eight, and we have ended the question. So now we need to search for the remaining two. Okay. Now you can write this thing as a risk as well. It's a good thing that you understand this. The customers are required to pay for 10 lessons in advance. Now, how can this be a risk? Let me explain it to you. Customers are paying for 10 lessons in advance. You receive payments for 10 lessons. Now, as per IFRS 15, the revenue should be recognized when you are giving the service. Like when you give lessons, you should recognize the revenue. Then you give lessons, you should recognize the revenue. But you are taking for 10 lessons in advance. You should recognize revenue when you give the lessons, like one lesson next week, one lesson next week, one lesson next week, one lesson next year. You should recognize revenue on that. If you take for 10 lessons in advance, there is a risk that you have recognized all this as revenue without giving service. So there is a risk that your revenue is overstated. Okay. So if customers are paying in advance, you should not recognize revenue as per IFRS 15 all now. You should recognize it in pieces. So whenever customers are paying in advance, there is a risk that you have not recognized revenue as per IFRS 15, hence revenue may be overstated. Discuss with management the process of recognizing revenue and ensure all revenue is recognized as per IFRS 15. Okay, that's a very easy point for you, that whenever customers pay in advance, there is always a risk that you have not recognized revenue as per IFRS 15, hence revenue may be overstated. And discuss with management how they recognize revenue and ensure all revenue is recognized as per IFRS 15. Okay, last point. Here I can find a risk that a Musitastic company sells a wide range of instruments. Because number of stores and high number of inventory lines, inventory counts will not be able to be completed in one day. You are not completing inventory count on one day. As a result, inventory count is being spread on 29th, 30th, 31st August, last 3 days of year end. Adjustments will be made for goods received and dispatched between the date inventory is counted at the year end. And on 29th, 30th, 31st, you are counting inventory. Okay. And whatever is the received and dispatched during these dates, you will make adjustments. So there is a risk that adjustments are not properly made, hence inventory may be misstated. Okay. Focused. And any goods received and dispatched during these dates will be adjusted separately. Are you getting this point? That let's suppose you count all inventory one day. Okay. You are not doing this. You are counting inventory on 3 days. Obviously, during these 3 days, there will be inventory coming, inventory going. So what you are doing, you are not incorporating them. You are counting all inventory, and any received and dispatched, your adjustment is made separately. So let's suppose during 29th August, there is 1000 units of inventory. During 29th August, there is 1000 units of inventory, and I dispatch 100 units or receive 100 units. Okay, I'm still counting 1000. Now I'm saying I will adjust the 100 coming or going separately. Okay, so what is the risk? There is a risk that adjustment for goods received and dispatched is not made properly, hence inventory may be misstated. Why I can't write exactly over understated? Because I don't know whether they have not made adjustment for received properly or dispatched properly. So there is a chance that inventory can be overstated or understated. So I can write both misstated. Okay. So the point was that 3 days you are doing inventory count, and you are not incorporating the received and dispatched on those dates. You are adjusting them separately. So there is a risk that you not make adjustment properly. You don't include the received or you don't remove the dispatched. So inventory balance can be both over and stated. Okay. Response. The firm is attending inventory counts. Okay. Observe while attending inventory counts that any goods received and dispatched are properly documented and adjusted in inventory records accordingly. Okay. So this was similar to something like that there was constant movement of goods coming and going during the count. So obviously there is a risk of mix-up, so inventory may be over understated. So it was just the same point in different wordings, that you were counting inventory and received and dispatch were accounted for separately. So there was always a risk of over understatement, not recording. So inventory can be misstated, and you should observe properly that any dispatched and received are properly documented and adjusted accordingly. Okay. So I hope this risk question is clear. Always remember, 6 points, 5 points are very easy. For 2, 3, you need to search. This is how risk works. Okay. You can copy this, and we are ending this question. Okay. Okay, now let's start question number 3 for this September-December 2024 exam. It is 1st July. You are the audit manager of Tennis and Company. So you are the audit manager of Tennis and Company. Tennis and Company becomes what? The audit firm. You are in charge of the final audits for 2 existing clients which are due to come in shortly. Montana is a not-for-profitable charitable organization which raises funds for mental health research with a financial year end of 31st March 2005. Oklahoma company manufactures aircraft components and at the financial year end of 31st July, forecast profit before tax is 12.3 million. Following matters have been brought to your attention. So what is happening here? That you are the audit manager of Tennis and Company, which is the audit firm. You are in charge of audits of 2 clients. One is Montana Company. It's a charitable organization. It raises funds for mental health. And Oklahoma Company, aircraft component it makes, and as financial year end of 31st July, profits is 12.3 million. Following matters have been brought to your attention. So the first company is Montana, which is charitable organization. Income. Montana income. Montana generates income in a number of ways, and the draft financial statements show revenue of 0.8 million. Company receives monthly donations from its many supporters, and these are paid by bank transfer to the charity. In addition, Montana raises significant income via 2 charity events which are held every year in April and December. Tickets, which are 40 each, are sold via website during 4 months leading to each event. Events in April and December were attended by 6,500 and 6,000 people respectively. Attendees at the events can purchase charity branded merchandise such as t-shirts at one of these stalls. Paying by cash or credit card during the audit planning, completeness and cutoff of income was flagged as a key risk. Now, just try to understand this scenario that you are the audit manager of Tennis. You are doing the final audit of 2 clients. Montana is a charitable organization. It raises funds. And Oklahoma is manufacturing aircraft components. It has a profit of 12.3. Following matters have been brought to your attention. Montana company's attention, income.
It generates income in a number of ways. Draft financial statements show revenue of 0.8 billion. Company receives monthly donations. How does charities work? They receive monthly donations from its supporters. They are paid by bank transfer. In addition, Montana raises significant income via two charity events which are held every year. This is also a thing that charities raise funds via events where they sell tickets which are 40 each. They are sold through website during 4 months. Charities have events, tickets are sold, and all the income generated is basically done in charity. This is how charities work, that they have events every year like cricket match or a concert or anything. They sell tickets, and whatever they generate, they use it as their income for charitable work. Events in April and December were attended by 6,500 and 6,000 people, respectively. Attendees at the events can purchase charity branded merchandise such as t shirts, paying by cash or card. So, at the charity events, you can also purchase t shirts, which can be paid by cash and credit card. During audit planning, completeness and cutoff of income was flagged as key risk. So, there are issues on completeness and cutoff of income. So, any procedures need to be considered this as well, as there is a flag on completeness and cutoff. Okay. Oklahoma, which manufactured aircrafts. Inventory. Oklahoma is forecasting a draft year-end inventory balance of 10.2 million. Company undertakes continuous production and a year-end inventory count will be carried out on 31st July at the company's factory and warehouse. No movements of inventory will be allowed on that day of the count. Okay, so inventory is 10.2. Company undertakes continuous production. So inventory count will be carried out on 31st July at the factory and warehouse. No movements will be allowed on the day of the count. It is expected that there will be significant work in progress at the year end. Work in progress comprises partly manufactured components. Senior member of your team is responsible for the audit of WIP, will be attending the inventory count as well as the final audit. Oklahoma values WIP by applying estimated percentage of completion to the standard cost of completed component. So there is significant WIP. WIP comprises manufactured components. Senior member of your team is responsible for audit of WIP. It will be attending the inventory count. It values WIP by estimating percentage of completion to the standard cost. Okay. I will read all these information again when I'm solving the question, but at the moment, the summary is that you are the audit manager of Tennis, which is the audit firm. There are two clients, okay? Montana, not for profitable charitable organization, and Oklahoma, which manufactures aircraft components. In Montana's information, it is given that they receive donations via bank transfer and they sell tickets for events at 40 each and generate income. 6,500, 6,000 people attended the event. For Oklahoma, it mentions that inventory is 10.2, continuous production, year-end inventory count is being done, no movements will be allowed on the day of the count, and there are significant WIP. Okay. So requirement A, let's start. What is requirement A? Describe substantive procedures auditors would perform to obtain sufficient audit events in relation to Montana's income. So this point relates to Montana. No need to refer to Oklahoma. This only refers to Montana here. So substantive procedures auditors should perform to obtain sufficient appropriate audit evidence in relation to income. You need substantive procedures on income. Okay. You should assume charity adopts IFRS 5 marks, 5 procedures required for income. Okay. Okay, now you need to be very careful that it's asking substantive procedures in relation to income. Now, at first sight, obviously, I've told you this in the previous past papers as well. Income is revenue, right? Income is revenue. So here, you need to go towards the substantive procedures for revenue. Now, what are the substantive procedures of revenue here? Please pay attention. What are the substantive procedures of revenue here? Compare overall revenue against prior years and budgets, investigate difference. Okay, so you can write the first one. Compare overall revenue instead of revenue, income against prior years, investigate difference against prior years and budgets. Now, if you just wrote learn that income is revenue and write compare overall revenue against prior years and budgets, investigate difference, you lose marks. Why? Because the question didn't ask for revenue, it's asked for income. So compare overall income against prior years and budgets, investigate difference. This is what you're talking about, this scenario. And if you just rote learn and write this, he knows that you are not linking to the scenario and you lose marks. Okay. So one, compare overall revenue against prior years and budgets, investigate difference. Okay. Second, calculate gross profit margin and compare to previous years, investigate difference. Okay. You cannot write this point. Why? Because it's a not-for-profit organization. So you cannot write compare gross profit margin against prior years, investigate difference. This is what you need to be alert. Had it been a commercial organization and it has for substantive procedures of income, revenue, I would have written of revenue, even this point, the gross profit margin as well, had it been a commercial organization. But since it's clearly mentioned, it's a not-for-profit charitable organization, you cannot write gross profit margin. Okay, because it's a not-for-profit organization. So this is why rote learning is good together with the mind switch is also on. If rote learning is done and the mind switch is off, then it was of no use. Okay, so I wrote compare overall revenue, but I didn't wrote gross profit margin. Why? Had it been a commercial organization, I would have definitely written it, but since it was a not-for-profit organization, I removed this point. Third, obtain a schedule of sales broken into major categories and compare this to prior year, investigate difference. Okay, you can modify this point. Obtain a schedule of income broken down into major categories instead of sales. I changed to income. Obtain a schedule of income broken into major categories. If you want to elaborate, like donations, ticket sales, these are the major categories, and compare it to prior year. Investigate difference. Okay. People say, what is relating to the scenario? This is what relating is. That the first point I completely wrote about the scenario, compare overall revenue, no, income against prior years. Okay. Calculate gross profit margin. I cannot write this because it's not a commercial organization. Otherwise, I would have written this, calculate gross profit margin. Here, I cannot write this. Is it means I am relating to the scenario. That's why I'm not writing. Obtain schedule of sales income broken down into major categories. What are the major categories here? Ticket sales, donations, and compare to prior years, investigate difference. Okay. Fourth, select a sample of sales invoices, recalculate sales tax has been correctly applied. Okay, you cannot write this point. Had it been a commercial organization, you would have written this point, but sales tax, there is no sales. It's a charity. Donations, no sales, so no sales tax. Select a sample of credit notes, trace to original invoice to ensure invoice correctly removed from sales. You cannot write this point because you're not selling anything. So there is no sales returns, no credit notes. Okay. So you have to write as per the scenario, not just, okay, revenue is income and blah, 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 blah. This can be done. That, okay, learn revenue and write revenue income procedures and blah, 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 as if the income question has come. You can do this. But if it's a commercial organization, if it's a not commercial organization, not for profit, make sure you are doing the correct thing. Example of credit notes, cannot write. Select a sample of customer orders and agree to dispatch notes and invoices through to inclusion in sales ledger to ensure completeness of revenue or income. Okay. So there are no customer orders, no goods dispatch notes. Okay. But for completeness, what you can do is select a sample of ticket sales and merchandise sales. Select a sample of customer orders, so rather than that, merchandise sales and ticket sales, and agree to what you call receipts. Agree to receipts to ensure completeness of income. Okay, so for completeness, two things need to be compared. So I'm comparing merchandise sales and agreeing to receipts. Ticket sales comparing to website sales. Okay, website records. So completeness, you can compare two things. Okay. Select a sample of both pre and post year end donations compared to sales invoices, or you can say receipts, to ensure recorded in correct accounting period. Compare with receipts to ensure recorded in correct accounting period. So I have finished this, but I'm still short of one point. Again, I'm saying income is revenue. You can write substantive procedures of revenue, all of them, had it been a profit-making organization, but you need to be smart. It's a not-for-profit organization, so compare income against prior years, investigate difference. You cannot write gross profit margin point. You wrote this point, schedule of income broken into major categories. Sales tax cannot be written because it's not selling anything. Credit notes, sales returns cannot be written done because it's not selling anything. And completeness point came, cutoff point came, still 1 point. So let's make it on our own. Revenue is a balance sheet item or a P&L item. It's a P&L item. Okay. So assertions, remember, accuracy, completeness, cutoff. Okay. So for accuracy, recalculate the total of income to ensure arithmetic accuracy. Okay. This requirement may have disturbed many students, but again, substantive procedures is a smart mind game. Had it been a commercial organization, income procedures, you can write revenue procedures. But since it was a non-commercial organization, you can only write income procedures relevant to the not-for-profit organization. Okay, please copy so we'll move forward. Okay, let's move forward now. Describe audit procedures the auditor should perform as part of the audit before and during the count. Very easy requirement. Okay. 6 marks, 6 audit procedures should perform before and during the count. So I need to write 3 procedures before the count. Okay. And I need to write 3 procedures during the count. It's a very easy requirement. I'm sure people might have gone in the exam by learning these, and people who remember these, they can easily gain marks in this particular question because it's a very easy thing. Okay, let's start 3 procedures before the count. Okay, go in the notes file of substantive procedures. There is a topic, substantive procedures for inventory, where it is before the count, also called planning attendance at count, during the count, that is called attendance at count, and after the count, that is called follow-up. Examiner can ask procedures before the count, or he can also ask procedures for planning attendance, same thing. He can ask procedures during the count, also ask procedures of attendance at count. He can ask procedures after the count, or also follow-up procedures, okay? And for continuous counts as well, okay? So here it is asking procedures before the count and during the count. See, substantive procedures before the count and during the count. 6 marks, you can write three procedures, okay? Before the count, the auditor should book audit staff to attend inventory counts, okay? The auditor should book the audit staff to attend inventory counts. Okay. The auditor should obtain copy of inventory count instructions from the client. This is before the count. The auditor should obtain copy of inventory count instructions from the client. Whether inventory is held by third parties, you can write this, or there is nothing mentioned like this third party, so I can write the next one. Even if you write the third one, it's okay. Review prior year working papers, okay? The auditor should review prior year working papers to check whether any issues have arisen in last year. You can elaborate this point because in the notes it's just written should review the prior year working papers, but make sure you elaborate it because I think that is a bit short. The auditor should review prior year working papers to check whether any issues have arisen. Okay. During the count, 3 procedures. Record any inventory held the third party is excluded from the count, reperform procedures adopted by warehouse manager, observe procedures of warehouse manager and assessing level of WIP, all can be written. Observe procedures of inventory movement during the count to ensure no omission or double counting. Okay. Anything can work. Okay. Even point number 4, point number 5, 6, 7. These points are all written in the official answers, so they look a bit elaborated, so I can write it, but you can write the second, third, first as well. Okay. Inventory movement during to ensure there is no omission or double counting. Select a sample of damaged items. You can write this as well. Observe counting teams to ensure count instructions are being followed. You wrote that take copy of count instructions from the client. Okay, so now you can write observe counting teams, observe counting teams to ensure count instructions are being followed, because before the count you obtain a copy of count instructions from the client, and during the count you observe whether those instructions are being followed. Select a sample and perform test counts from sheet to floor and floor to sheet. During the count, what you do is select a sample of inventory and perform test counts from sheet to floor and floor sheet. Okay, so select a sample and perform test counts from sheet to floor to sheet. What is sheet to floor and floor to sheet? You perform test counts if in sheet 10 items are written. You go and count to floor whether 10 items are there. If in sheet 5 items are written, go at the floor warehouse and see in sheet 5 is written, so at the floor there is 5 also. This is sheet to floor. Or you can go to the warehouse, count how many items are there in the floor, 1 2 3 4 5, and check whether in the sheet we have written 5 as well. So this is called floor to sheet. You first look at the floor that 5 items are there and check at the sheet. Okay, they have written 5. This is floor to sheet. Or you look at the sheet first, 5, and see at the floor that whether there are 5 items. This is floor to sheet. Okay, so I think 6 marks these and 5 marks previous. They were very easy, 11 marks. I hope you are clear with it. Okay, please copy so that we can move towards the next 9 marks. Okay. Okay, so after completing this part B of the question, let's move towards the remaining parts and wrap this question up. So the next part is describe substantive procedures auditor should perform during final audit to obtain sufficient appropriate audit evidence in relation to valuation of work in progress. Okay, So it is expected there will be significant levels of work in progress at the end of the year. WIP comprises partly manufactured components. Senior member of your team is responsible for audit of WIP, will be attending the inventory count as well as the final audit. Oklahoma values WIP by applying estimated percentage of completion to the standard cost of a completed component. Okay, so substantive procedures for valuation of WIP, 4 marks for procedures. Again, if you go to the handouts file, there are substantive procedures of all topics, and here it's work in progress, so you can write form procedure from that, cast the schedule of total work in progress, agree to trial balance and financial statements. Okay, so let's write cast the schedule of total WIP and agree to trial balance and financial statement. Okay, so cast the schedule of total work in progress and agree to trial balance and financial statements. I will just cross verify is the same point card the schedule of total work in progress, active trial balance, and financial statements. Okay. Agree sample of work in progress access to work in progress schedule. Agree sample of work in progress to work in progress schedule. Okay. Then the third one, agree percentage completion. That's a short point, so I have options. I can ignore this point. Observe procedures carried out by management in assessing level of work in progress. Okay. And fifth one, discuss with management how percentage completions are attributed to work in progress. So you can discuss with management, very good point, how percentage completions are attributed to work in progress. Discuss with management how percentage completions are attributed to work in progress. Now you can write the fourth one, agree for a sample that percentage completion assessed in accordance policies communicated to assessment. Or I am just giving you a hint. You can write this and complete this. You know, it's written Oklahoma values WIP by applying estimated percentage of completion to the standard cost of the completed unit. Since they're applying work in progress completion to the standard cost, so you can write one procedure of standard cost as well. Like, let me find it. Standard costs. Sure, it was present in the scenario as well. Standard costs procedures. Ensure standard cost is reviewed and updated periodically. Discuss with management basis of standard cost. Review variances between standard cost and actual cost. Okay. Review variance between standard cost and actual cost. And discuss variance with management. Okay, now this is a procedure of standard cost, but what I'm trying to tell you that people many times ask what is linking with the scenario here is that you have read the scenario. You could have easily written 4 procedures of work in progress. I'm sure you would have gained marks as well. I'm seeing all the procedures in the examiner answer as well. I just checked the examiner answer. It's in front of me. But the thing is that when you read the scenario and say that they're applying work in progress by applying the percentage completion to standard cost, you can write one or procedure of standard cost as well to ensure that you are actively involved in this question. Okay, so I think you have worked around this 4 mark work in progress requirement. This procedure, this question was a substantive procedures, where first one was revenue and income. I wrote for revenue income, and I changed some points like tax and gross profit because it was a charitable organization. I couldn't write for the commercial organization. I would have written, but not for the non-commercial organization. Second part, very easy, before and during the count. And the third part, WIP. Okay, if you learn these, it's easy. You can copy this. Then I will move towards the last 5 marks of this question. Okay. Okay, let's move to the final portion of this question. During the testing of Oklahoma's work in progress, the audit team has identified that the company had applied an incorrect percentage completion when determining value of number of partly completed components. Audit testing has confirmed that work in progress balance is overstated by 0.7 million. The directors do not consider it necessary to amend the financial statements. Now, what is the matter? During the testing of Oklahoma's WIP, audit team has identified that company had applied incorrect completion when determining the value of partly completed components. Audit testing has confirmed that WIP is overstated by 0.7 million. The directors do not consider it necessary to amend the financial statements. Okay. Discuss the issue and describe the impact on audit report if this issue remains unresolved. Okay. Now, this is not a question of subsequent events, remember. The subsequent event question has some incidents, right? That there is a fire, there is a defected badge or whatever, okay? And this was disclosed after the year end, and the requirements are also different. Discuss whether FS needs amendments, describe audit procedures and impact on audit report, okay? Now, just by seeing impact on audit report, many students think this is a question of subsequent events. No. Subsequent events mentions you some incidents or cases, okay, which are occurring after the year end. And it asks three requirements. Number one, whether FS needs amendment. Number two, audit procedures. And number three, impact on audit report if issue remains unresolved. Okay. This is a separate type of question. You have seen this many times in the classes as well, like Ash Company, Palm Industries, and many past papers. This is not a question of subsequent events where something has happened. It's just saying that audit team has identified that the company applied incorrect percentage completion and WIP is overstated by 0.7 million. Directors do not consider it necessary to amend financial statements. Discuss the issue. So you just need to write some information about the issue and the impact on audit report. Okay. So discuss the issue. During the audit, the team identified that company has applied incorrect percentage in determining value of partly completed components, and as a result, WIP is overstated by $0.7 million. Okay, this is the issue. The issue represents, obviously, it's asking impact on audit report. So for impact on audit report, you first need to calculate materiality. Represents 0.7 million divided by what is the Oklahoma's profit? 12.3 million. Okay. So 0.7 divided by 12.3. Let me just find it. 0.7 divided by 12.3. 5.7% of profit, which is material but not pervasive. Okay, or you can write the issue is material but not pervasive as it represents 5.7% of profit. So issue represents 5.7% of profit, which is material but not pervasive. Since directors do not consider it necessary to amend financial statements, a qualified opinion will need to be issued. A basis for qualified opinion para will need to be added that explains reason for qualified opinion. The opinion para will be stated with What? Except for. Okay. So this is the impact on audit report, because before writing anything about impact on audit report, you must need to compute materiality. For materiality, you can never write impact on audit report, because if it's material but not pervasive, qualified, material and pervasive, adverse. But remember, you do this thing in subsequent event questions, that you write the impact on audit report. I've told you a 5-step strategy, but the requirements are described by the FS needs amendments, audit procedures, impact on audit report. Okay. This is not a question of subsequent events. It hasn't got 3 requirements. It just says discuss the issue. So you just need to write what has happened. Same from the question. Impact on audit report, you compute materiality and then write whether impact should be qualified or adverse. This basis for qualified opinion will be added, and it states except for. Okay, so hope this is clear to you. Please copy this. And I think our whole question and whole past paper is ended. So you can leave after that. Do not mix up subsequent event questions with these type of questions just by saying impact on audit report. Subsequent event question will always ask discuss whether FS needs amendments. So you need to write whether it's adjusting, non-adjusting. Then it will ask you procedures, audit procedures, and then it will ask you impact on audit report. This is a separate question. We just asked you discuss the issue. So whatever has happened, you just discuss, right? Whether it will impact financial statements or not. Like I could have written that it would overstate inventory balance by 0.7 million and it's not obligatory. I just discussed the issue. Impact on audit report, first materiality needs to be computed and then qualified, adverse or disclaimer. Okay, so please copy this, and this question in the past paper is over. Thank you.